You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports. We make the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, Welcome back. Travis Robinson, Maxwell Agencies in the house. Welcome.
Good morning. I'm a multiple offender at this point.
Multiple offender. Yeah, exactly. So we got the coach in him, and we'll talk about that in a little bit. We'll talk about group health care, nonprofit. He's doing it all nowadays. So we're going to talk with Travis Robinson about that. And let me remind you, if you ever have any home or finance related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Just remember that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, of course, we're celebrating today. You know, I think what they should do is after a day like yesterday, shouldn't they have like National Tylenol Day or, I don't know what else do you use. I don't even use this stuff anymore. But, we had National Vodka Day yesterday. And National Taco Day yesterday. And today you look at it, Get Funky Day, not in America these days. No. Rhode Island Day, that's almost probably as bad as Delaware Day. Not going to do that one. National Do Something Nice Day. We don't do that in America anymore, do we? Okay, having beaten her anorexia, let's just go with National Apple Betty Day. It's like an apple turnover, an apple crisp. Why do they call it Apple Betty? I guess it comes from the colonial times. I don't know. Just call it an apple turnover, apple crisp. Just whatever you do, make sure there's whipped cream on top. Just throw that out there. Let's take a look and see what the markets are doing today. The Dow Jones Industrial Average is down 145 points. Figures after yesterday. It was up yesterday, down today. The S&P 500 is down 24. NASDAQ down 88. Oil down another $1.62 a barrel. We watched that one for quite a while because it was up there almost at $95, $96 a barrel at one point in time. And we were watching that. And I was telling you that the futures on gasoline were dropping. The futures on gasoline are still dropping. Not oil. Futures on gasoline. So now we've gone a week ago, gas in the formerly Golden State, $6.03 a gallon. As of yesterday, $5.93 a gallon. I guess I might have to go fill up the car. But for the entire state, $5.93 for the whole state too. Okay, that's not bad. Josh, we're trying to catch you. You're at $5.03. You're not dropping too much over there. And yeah, figures. Lori's down at $3.29 a gallon. $3.29 a gallon. We might have to stop reporting that one because it makes my blood curdle when we look at that. Louisiana, $3.29 a gallon. They don't have Gavin Newsom there. Should we look at Florida? Because they've got, Florida's at $3.52. They've got Matt Gaetz. He's the leader of the Democrat Party now. So, you watched what he did I threw this out at somebody at my office this morning, and I asked this question. President Trump, really did nothing on January 6th. He did a speech and said, go peacefully. Didn't shut down the government. Matt Gaetz gave a speech, and now the government shut down. So aren't they kind of like the same thing? I just throw that out there for you. Talk about a worthless piece of humanity. What did you think I was going to say? It's a family show. Another one of those, another troublemaker. And it's fascinating watching what this character's doing. But I just throw it out there. To me, nothing more than just a troublemaker. And I wonder what the people of Florida are saying about him now. Just gonna give you that. Okay, so let's see what else is going on in the world. Oh, President Biden woke up. He's going to start building the wall now again on the southern border. We heard that anywhere before? Did we hear anybody else talking about a wall on the southern border? Oh yeah, it was Biden. First day in office when he said, we're not building a wall, until he lets millions and millions of people in, some of whom have been identified as murderers. And they proudly wear the badge in their tattoos saying how many people they've murdered. Thanks, President. And while the Democrats and Matt Gaetz have shut down the government, have you been watching some of the other things that are going on right now? President's giving away another $9 billion. $9 billion. So canceling student loan debt once again. I'm going to share with you, don't get suckered by this again. We've been suckered by him how many times already when he's done these giveaways that he doesn't have the authority to do, according to the Supreme Court. Not according to me, according to the Supreme Court. He doesn't have the authority to do it, but he does it anyway. So while the Democrats and Matt Gaetz-led Democrats, I guess maybe we should put it that way, the Matt Gaetz-led Democrats, right, they're out there and they're not watching the ball. You see the border wall starting, not reporting on that one. We see that we see that the student loan debt cancellation. What's next? Oh yeah, I know what's next. How about this one? Walmart. Walmart's saying that they're seeing fewer sales or their sales are dropping. And, we hear these all the time. Major corporations, they always come up with some excuse when sales drop a little bit. What's the latest? Well, people are using Ozempic and Wegovy, so they're buying less food. You can't make this stuff up. This is what Walmart is saying. The CEO maker of Pringles and Cheez-Its also said this week the company is studying the potential impact of dietary behaviors on their products. Haven't they been doing that already? Wouldn't they already be watching the dietary behaviors? I wonder what kind of an impact that'll have on healthcare. Now, we're not going to get into that, but we'll talk about health insurance today, understanding the benefits of owning your first home and how to maintain your credit in retirement. All that and more. Reach me anytime. Off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Hey there, friends. Wondering if now is the right time to buy a home? Or are you waiting for a bunch of foreclosures? The facts speak loud and clear. Defaults and foreclosures are down. Sure, we might be headed towards a recession. But did you know interest rates typically drop and real estate's value often go up during a recession? So what are you waiting for? Higher prices or higher payments? Don't navigate these waters alone. Connect with RonSiegelRadio.com today. That's RonSiegelRadio.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Make the call. Don't call somebody that doesn't understand lending to find out about lending. It's amazing. I had a client just recently called me and said, my insurance agent said, my realtor said, I read on the internet. And every one of them gave him bad information. Probably tried to give him good information, but it wasn't accurate. They just don't have the experience. Geneva Financial, they've got some great people over there. Talk to us at Geneva Financial. Every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. OBMMI only reports the locked rates. They don't tell us points paid, points received, points paid, or the APR. Let's see what happened. 30-year conforming loans up a little bit, 7.6 yesterday. 30-year jumbo loans down quite a bit, 7.709 yesterday. 30-year FHA, that was up 7.332. 30-year USDA, that one was up, down a little bit, 7.24. That's the rural areas. Generally no down payment. Of course, you don't have to say no down payment anymore because there's loan programs for almost anybody with no down payment. Can't go into the jumbos, but almost anybody can buy a house with no down payment right now. And the best loan on the market, 30-year VA loan, 7.228. If you want our update, our commentary on the current market, you can go and register rsrmarketminute.com. rsrmarketminute.com. We send out it's like a 2-page email each morning, and we give it to you. We have to wait until the data comes out. We can't send it out before the data is released, so that's always done at various times throughout the morning. But we send that out each day. Get on the list. It's free. rsrmarketminute.com. Let's see what's going on in the markets today. The S&P 500 is down 24 points. 10-year Treasury is down 1 basis point, 4.71. Mortgage-backed securities are up 7 basis points. That means interest rates will be down just a little bit. I'm tongue-tied today. Holy cow. Maybe I need some more coffee. I don't know. Let's see what's driving all this. Well, it's confusion. No, not just the Matt Gaetz Democrat confusion. There's other things. We got initial jobless claims this morning. Measures individuals filing unemployment benefits for the very first time. Rose 2,000 to 207,000. Not a very big number. Continuing claims of those that continue to receive benefits after their initial claim fell 1,000 to 1.664 million. The report continues to show that employers are holding on to their workers and remains at very low levels. The labor picture has been slowing down as the first response on the part of an employer when the economy slows is to hire less. And we've been seeing hiring cool, especially after yesterday's ADP report, when they only had a small number of jobs added. Tomorrow, we get the big BLS jobs number, so we'll see what's really going on there. In contrast to this, Challenger job cuts report released this morning. Year to date, this report is showing the highest amount of cuts since 2009 when you remove COVID. Clearly, this is not syncing with the initial jobless claims, and there's a bit of a difference in pictures. Tomorrow, that jobs report, expecting 170,000 job creation, expecting the unemployment rate to drop from 3.8 to 3.7. Why would it drop? Less people are out looking for a job, so they're not counted as unemployed. So if you don't look for a job and you don't have a job, then you're not unemployed. Only with the government can we come up with something like that. Big things to look for will be part-time versus full-time jobs, hours worked being cut, negative revisions to the previous reports, seeing that a lot. And how many people, this is a fun one. So if you think about this, a lot of folks are out there getting a job, but they've got 2 or 3 of them. And the government counts that as new jobs. Figure that one. Because they're not getting enough hours to live. Fascinating. Now, I watch this stuff every day. I know you may not, but we do have it fascinating. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. So we're going to chat this morning. Travis Robinson is with us, Maxwell Agency, and he's got his own. Are you related at all to Jeff Bezos?
No. I wish.
Because they have that the annual Day of Giving, or you can go to their site and they have their annual giving or something like that.
Yeah.
Day of Giving.
Yeah.
Well, you're coming in here to talk about giving.
Yeah, absolutely. Yeah, we want to give back. We want to help.
So explain that a little bit.
Well, with employee benefits.
Maybe you're not related to Jeff Bezos.
I'm not related to, no. But
same haircut.
Yeah. But with employee benefits and group health insurance, and that's what we do. It's what we focus on. So we're helping small business owners, save money. We're helping them save right now anywhere from 15 to 20% on.
That's massive.
Yeah, it's big.
That goes right to the bottom line.
Oh, and a lot of it is they're getting hit with double-digit renewals. So if they're
at least they're getting renewed.
Yeah, right. Well, that's guaranteed. So if they're getting hit with a renewal,
it's guaranteed.
Well, it's guaranteed issue, so they can't really be declined if it's a small group. If it's under 100, you cannot be declined.
Oh, okay.
Yeah.
So it's not like we're talking a lot about people that can't get renewals on their home liability insurance right now in California. A lot of companies have gotten out of that business. I know that's not your realm,
right?
But it's an issue. Many of us don't know the difference between the carrier that's going to give us our group health and our home insurance and our auto insurance and our umbrella policy and our fingernail policy and all. Our pet insurance.
Yeah. We do pet insurance as well.
Okay.
But
is that guaranteed issue too?
I believe so. Yeah. So, but health insurance is guaranteed issue. So you cannot be declined. Your rates are based off of your age and your home zip code. So, and a lot of businesses in Orange County, across California, are getting hit with double-digit rate increases. So their renewals are coming back. Most businesses are renewing right now in the fourth quarter. So they're getting hit with those, double-digit renewals. So we come in, we shop the plans.
What if you have multiple homes?
Well,
because you said it's the
primary residence.
Okay.
Yeah.
Because the reason I ask that is because lots of smart people are taking their businesses out of California.
Sure.
And they've got a residence out of California. Yep. And they've got a home in California. And the vast majority of their employees are in California. So how does that work?
Well, you also want to make sure that your network of doctors is where you're going to be at the most of the times. Because where you're going to go see a doctor is where you're at most of the time. So we want to make sure that the network of doctors is within that zip code, right? So,
and they're not with Kaiser this week.
Yeah, I don't watch the news, so
okay.
But I know Kaiser's on strike for something.
Yeah.
But so we're contracted with Kaiser. But if they get a double-digit health, a renewal, we come in, we shop the plan, we go to other carriers, we make sure that each employee doctors are within that same network, so we can move them with no disruption. And on average, we're saving businesses, I would say, about 15%.
Wow.
Yeah.
That's a lot.
Yeah.
Especially when you think about it, and I don't know the numbers. I'm just going to say, okay, let's say you're spending $100,000 a year for your company on health insurance. I think that's probably some companies do that. It's not.
If you have a roughly over 100 employees, that's a fair assessment.
Okay, and if you save 15%, you don't have to sell anything as far as whatever your product or service is.
Correct.
And that's $15,000 added to your bottom line. Mm-hmm. So that's big.
Right.
Is there a penalty that a company will get if they go from Anthem this week to Blue Cross next week and United Health the week, not week, but Anthem this week and next year they're with Blue Cross, and the year after that, then I don't even know the name.
No. So you're in a one-sided contract. So your rates will usually be locked in for 12 months.
Okay.
But you can switch your plans at any time. It just has to be revolved around the first of the month.
Okay.
Now it can be a pain to switch providers, but if you're with a carrier today and you get upset with them and you want to switch the beginning of the month, we can do that. Absolutely.
So and the providers don't look down at somebody for that.
No,
Because we often hear that if you go from one bank to another with your business banking,
oh no,
sometimes the banks will say, well, you don't have a history of stability.
oh no, you can switch insurance every single year.
Okay.
With Maxwell, every single year we will shop your benefits. So if you're with Blue Shield 1 year, every single client of ours, we shop the benefits. We approach them and say, hey, you're getting this percent, you're getting this kind of renewal. If we move the business here, we can save this much money, or it's better to stay here. So we do that every year for all of our clients.
So what's that? There's some commercial on right now that they're talking about that the provider spends more time focusing on the company's business, letting the company then go and focus on what they do.
Right. Yeah. And that's
right. And that's kind of what you're doing.
We want
to
take that away from the business owner. We want them to worry about their employees. So we'll handle all their HR issues, all their open enrollment issues. We'll meet with their employees one-on-one and go through doctors, prescription medications, whatever they need. We meet with them one-on-one. So we take that really off of their plate.
How does that tie in with what you're doing with some of the nonprofits?
So what we do is, if you're a part of a nonprofit, a part of a local sports program, and need to raise money, or
which I think that accounts for every one of them.
Everyone needs money, right? Especially if you're a sports.
How about your local radio station?
Are you a nonprofit?
No.
Well,
yeah, we are not. We don't have a nonprofit structure, but we are a nonprofit.
Okay, so
we don't make any money.
What we've done at Maxwell is we've come up with kind of a unique program where we're giving back to local high schools, 501c3s monthly. So it's reoccurring revenue that we're donating back to these nonprofits. And it's I think on average, my son plays baseball. I coach high school football. So I'm on both ends. I see what it takes to run a program. And then being a parent, I see how much money,
they're coming after you every year for.
So we kind of came up with this idea to say, hey, let's give back. Let's give back.
We'll talk about that when we come back.
Yeah, absolutely.
You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, giving back. It's a great thing to do. Everyone should be doing that in some way. How about if you do it without even having to come out of pocket? Like that idea. Understanding the benefits of owning your first home, how to maintain your credit in retirement, and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Great app. If you want to know the value of your property, it's there. If you want to watch or monitor your credit, bank accounts, asset accounts, you can do it there. If you want to shop for homes, 97% of the homes across the country, it's there. Best of all, free to you. Understanding the benefits of owning your first home. Are you considering buying your first home? If so, it can be helpful to know what led other people to make that decision. According to a recent survey of first-time home buyers by Pulte Group, sorry. Should have looked at it a little closer. Quote, when asked why they purchased their first home recently, the answer was simple: because they wanted to. Pretty deep. Either the desire to stop renting or recognition that home ownership is a smart financial investment was the main motivator for 72% of respondents, unquote. While that survey looked specifically at first-time homebuyers buying newly built homes, the same sentiment is true for just about anyone buying their first home. Here's a bit more information to help you think about those two benefits of home ownership to see if they're a key factor for you too. When you buy a home, you have more stability than when you rent. You might want to stop renting because rents keep going up. If you're a renter, that means there's a chance your payment will increase each time you sign a new rental agreement or renew your current one. On the other hand, when you buy your home with a fixed rate mortgage, your monthly housing payment is predictable over the length of that loan. This stability can give you a peace of mind that renting just cannot provide. Jeff Ostrowski, real estate journalist, breaks it down, quote, with fixed rate mortgages, your monthly principal and interest payment is set for as long as you keep the loan. Sign a rental lease, however, and you can see your rent rise the following year, the year after that, and so on, unquote. Ask about our friends over at Geneva have a rapid refi program where they're actually monitoring your interest rate. Whenever you can save 10% on your payment and 3 years on your term, the rapid refi kicks in. When you buy a home, you grow your wealth as home values climb. Beyond that, owning a home can also be a great long-term investment. While renting may be the more affordable option right now, it doesn't provide an avenue for you to grow your wealth over time. Mark Fleming, chief economist at First American, explains that an important distinction to consider, quote, given current dynamics, more young households may choose to rent in the near term as the cost to own, excluding house price appreciation, has unequivocally increased. Yet, accounting for house price appreciation and that cost of home ownership, whether to rent or buy will depend on where and if a home is likely to cost more or less in the near future, unquote. Basically, renting does not allow you to build equity. In contrast, home ownership can help you grow your net worth as your home's value appreciates. That's a significant perk you can't get if you keep renting. When you take that into account, it may make better financial sense to buy. Most experts project home prices will continue to appreciate over the next few years at a pace that's more normal to the market. That means when you buy a home, not only are you investing in a place to live, but you're also investing in your financial future. Bottom line, if you're ready, it can be a smart move to buy your first home instead of renting. Let's connect so you can stabilize your housing payment and start building wealth for your future. That's the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. Continue our conversation this morning. Travis Robinson, Maxwell Agency, is with us. No, he's not a talent agency, and he's not out there promoting Travis Kelce and Taylor Swift.
Oh, goodness.
They're group health insurance agency. And one of the things that we like, Travis has been a guest on the radio program for several years now, but they came out with this program to help the community. And anytime we can get involved in organizations that are helping the community, we love it. So explain that a little bit, Travis, what you're doing with this give back program.
Well, it's pretty simple. We're on average right now, I think if it's a nonprofit 501c3, if it's a local high school, which most of their, say a football program or baseball program, they're a nonprofit. So we're giving back, I think on average, the low end, we're giving about $500 a month, and the high end is about $3,000. We're writing checks monthly.
Wow.
To these programs. Yeah.
So say it again, 500 to 3,000?
Yeah. Well, it all depends on, you
guys are coming up with some sort of a donation based on what they deliver.
Correct.
Now, I'm just going to throw this out there to you because I don't know the answer and I'm not an expert in this. Can a religious organization create a group? Like could a temple or church be a group? Or do they have to wait
on the employee benefit side?
For employee benefits?
Yeah, all you need, employee benefits is pretty basic. You need payroll.
Okay, so it has to be something that's payroll.
W-2 employees.
So maybe you don't even know the answer because I know it's off base, off topic. But you get an association like the California Association of Realtors.
Okay.
Right, they've got, thousands or hundreds of thousands of members.
Mm-hmm.
and I don't know, maybe they offer some sort of insurance, but no one's an employee of theirs.
Right.
So is that a different kind of insurance?
I would. That's a little bit out of my.
Okay, so that's not what
yeah.
I knew it's not what you do. I just didn't know if you obviously know more about health insurance than I do.
Correct.
But that's not saying a whole lot.
Hopefully, yeah, hopefully.
That's not saying a whole lot. I know I give you a lot of credit, Travis, but that's I just sometimes when I ask questions, it's things that come to my head, and
Right.
people don't want me to let those things come through without a
So
filter.
whatever makes a business, right? W-2 employees, those are your employees. They can be in California, Arizona, Texas, wherever they're at. It doesn't matter. We have a lot of clients that are based in California with employees in multiple states.
So it's like our friends at Geneva. They're based out of Chandler, Arizona.
Okay. Yeah.
But there's some of us here in California and some all over the rest of the country.
Yeah. So we do business. We have clients everywhere.
So when you first started coming on Ron Siegel Radio, you and I used to chat a lot about the value add,
right?
As far as doing a lot of the human resource work and compliance issues and all that. Happens to be another service you're adding.
Yeah, we're adding. If you have 5 or more employees, you need to do sexual harassment training, and that needs to be done by every single employee, management down to anybody, and then also employee handbooks, which is a big one right now. So employee handbooks, if you have 1 employee, if you have 150 employees, each employee, those employee handbooks need to be renewed and updated annually, and every single employee needs to sign them.
Is that a California issue or is that federal?
It's California. Yeah.
Crazy stuff. I mean, because some of the, I always wonder when you hear about the issues that are going on. It baffles me because I'll talk to friends, not necessarily in group health or the health insurance arena. I talk to friends and they say, well, we don't have to do that. And I said, yeah, but you're in America. We're in California. So it's sometimes these things are different.
Yeah. There's a lot of rules and regulations, and we really just want to take a lot of those compliance issues, ACA compliance, ERISA compliance off of the, business owner's plate and let them do what they do well and make their job easier. So
makes it a lot easier because you guys can then centralize your education, right? Some of the biggest things is my guess, and I'm just guessing, that probably over half the companies, small businesses out there, don't know that you have to do the what do you call it? The sexual harassment training,
right? Yep.
Or to have a new handbook every year. They created a handbook. You signed it. You're done.
Yeah, and all of our stuff is digital. We do everything paperless. So most employee
handbooks.
Save a tree. You save a tree, yeah, and time.
And time.
So, but most employee handbooks are extremely thick. So with ours, all of our paper, everything's paperless. So we go in, we have enrollers come out, Spanish speaker enrollers if we need them, come out and they'll sit down and meet with the employees one-on-one, and we do everything on a laptop or a computer, and it just makes life so much easier.
Right down to iPads now, making it
I think so.
nice and simple.
Yeah.
You love the idea of the simplicity that's coming into these things.
Well,
so what type of groups are you finding that are benefiting from your nonprofit returns? Is it any specific industry that works best for?
No, industries, it really doesn't matter. I work anywhere, blue collar, lawyers, everything. So I think a niche that we have found is manufacturing. We do really well with manufacturing companies, but it doesn't matter. I mean, I have dentists, attorneys.
So even a dental office, which is should be a smaller group than I would think a manufacturing company.
Yeah, but a lot of dentists have multiple locations.
I'm not going to cause trouble here if I ask how many cartels you're dealing with. No, don't go there. So that's something I would just come up with.
Yeah.
But dentists are probably a smaller group, aren't they?
Yeah, but they have multiple locations and multiple offices. So having it digital, we send out an email, or it just makes life easier. It speeds up the process going through underwriting.
What's the biggest size companies you work with?
Right now, 500.
500.
Yeah.
Wow. Okay. So you go from a relatively small number to 500. It's a lot of people.
Yeah. A large group starts at 100 employees.
Okay. Is there different rules and requirements for large groups?
Absolutely. Yeah. Over 100 employees, you get into a little bit different rules and regulations and quoting. You can be declined. If you're over 100 employees, they'll do medically underwrite you, and then you can be declined. If it's under 100, it's guaranteed issue. So it's based off of your age and home zip code, like we spoke earlier. So it's a little bit easier.
You would think just from a an ignorant individual like me, you'd think that the insurance companies would like that larger group better, just because it's going to be, just by definition, it should be more diverse, right? Unless it's a business of all old people, right? I mean, but other than that, you're looking at, you get a group of 5, and everyone's going to be probably within 5 to 10 years of each other,
Right.
You get a group of 100, you're going to have a much wider,
way bigger pool. Correct.
Yeah. And you'd think that the insurance companies would like that, and that would be the one that would be guaranteed, as opposed to the small group.
And they medically underwrite it. They look at claims. They look at claims history.
So they probably have to worry about, do they have enough capacity?
Right.
Which is obviously what we're dealing with a lot in California right now.
Right. So you just have to jump through a little bit more
property,
hoops.
I mean.
Yeah. But
okay, so learning a little bit more about health insurance and giving back, and maybe we'll talk, I don't know, maybe we'll see if we can get Travis to talk football when we come back. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, also how to maintain your credit in retirement. All that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio, and if you miss any part of our broadcast. Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by creditsanitizer.com. You have a credit report and it's wrong. What are you doing about it? Credit Sanitizer has these solutions for you. How to maintain your credit in retirement. There are many financial details to manage when you approach and begin retirement. Yet as you make plans to preserve your wealth throughout this new season of life, you don't want to forget the importance of maintaining your credit as well. A good FICO score can be a valuable asset both before and after you retire. Depending on your situation, you might not plan on applying for mortgages, auto loans, or other types of financing as often after you stop working full-time. Yet, even if it's true, there are still plenty of reasons credit matters during retirement. A recent Wall Street Journal article points out that your credit could affect many insurance and healthcare decisions during your retirement years, such as whether an assisted living facility might accept you as a resident in the future. A good FICO score might also provide you with more financing options to cover medical expenses. And if you're looking to downsize, purchase a vacation home, or want to co-sign for a child or grandchild, your FICO scores could come into play in these situations too, along with others. Maintaining your credit in retirement is your best financial interest. Below are 4 tips to help you accomplish this important goal. First, make sure to stay credit active. We've talked about that. Go to rsrccpayment.com, rsrccpayment.com to meet the minimum scoring requirements for a FICO score. You need to stay credit active. In other words, your credit report needs at least one account that has been updated and reported to the credit bureau within the previous 6 months, in addition to one account that has been open for 6 months or greater. The good news is that staying credit active doesn't require you to go into debt. You can also accomplish this goal without paying $1 in interest charges. One potential way to stay credit active could be to use your credit card with no annual fee. When you do use the account, it's wise to pay off the full statement balance each month by the due date. This method of credit card management should help you avoid credit card interest charges. Meanwhile, you could remain eligible for a FICO score if the card issuer reports the account to credit bureaus on a regular basis. Avoid late payments. Again, rsrccpayment.com. We tell you how to do that. Payment history makes up 35% of your FICO score, a fact that remains true before and after you retire. As a result, avoid late payments is essential if you want to maintain a good FICO score. Keep a low credit utilization ratio. Did I mention rsrccpayment.com? Yeah, that'll show you exactly how to keep that low credit utilization ratio, because that's going to account for 30% of your FICO score. Pay off your credit cards as much as you can before the statement closing date, and then it doesn't matter as long as you make the minimum payment at the payment due date. 2 payments a month, that's right. Continue to monitor your credit. You want to keep doing that one. Cleanall3.com, cleanall3.com. Help you manage that, and it actually gives you a real FICO score. Cleanall3.com. Maintaining good credit during retirement isn't complicated. It simply requires you to continue many of the same smart habits that you use to build good FICO scores in the first place. That is the Your Credit Matters segment, brought to you by creditsanitizer.com. You have a credit report, it's wrong. What are you doing about it? Credit Sanitizer has these solutions. Continue our conversation. Travis Robinson, Maxwell Agency, is with us. And yeah, he does a little side gig. Football coach.
Football season.
We're in football season. How's your team doing?
Doing good.
So they're in probably one of the tougher conferences in the country.
I would Trinity League is, yeah, I would think so.
You know, I don't follow high school football as much as I used to, but St. John Bosco's had a good reputation for a lot of years.
Yeah, and that has nothing to do
I heard
with
Modern
me.
Day got rid of one of their quarterbacks though. He didn't go to St. John Bosco. He went to.
I'm not up to speed on all the.
You don't deal with quarterbacks.
Rumors and gossip, and I don't know.
I don't know if you heard about this guy named Matt Leinart. Did you ever hear that name?
I know the name. Yeah.
Okay, well, I can't believe it. I feel old because we watched him at Modern Day, and we watched him when he was at USC and in the pros. And his son actually just left Modern Day and went to Newport Harbor or something.
Really? Yeah.
Guess he wasn't getting the playing time he wanted.
Yeah. I focus on Bosco. I don't worry about other noise or other issues. I'm focused on my guys and our team.
So before we get back to talking about insurance, I want to ask you a question though, because you said you're focused on Bosco, and I did watch one of the interviews with Deion Sanders recently,
right?
And he was made a comment that as a coach, they can go and monitor how much time each player is spending studying game film or game. I guess it's not film anymore.
It's
an app.
It's on Huddle.
Okay.
Huddle. In NFL, colleges, everyone uses it.
So, do you guys monitor the players, how much time they're spending there as well?
I don't personally, but I'm sure
someone is. Someone's watching that.
So you can see how much a coach, a player spends on Huddle, which is reviewing installations, game film of your opponents or our own film. We tape and film all of our practices, so I'm on Huddle quite a bit.
So, but doesn't that mean then you're not just focused on your team then, right? So you have to be looking at the other your next opponent or somebody that's coming up down the road.
We game plan, so we have to know what whoever we're
My
playing
bet
next.
is you probably know what Modern Day is doing all the time.
Well, we have an
They're a big
idea.
rival.
We like to look at what they're doing. Are they running the ball left? Are they running the ball right? To keep it simplistic. Are they going to throw the ball? Are they going to,
what are their tendencies? So it's like baseball when they talk about the analytics.
Analytics, yes.
That the Angels don't understand.
Right. Yeah.
That's a whole different story.
So yeah, we do
your son's Brea Linda team might be able to beat the Angels.
He plays baseball for Brea Linda, and they're doing pretty good. They had a great year last year. So yeah.
He's not the one. I mean, I know last time I asked you, I'm hoping you about the kid that did the commercial that is talking the suicide commercial.
Mm-mm.
Okay, so I'll have to tell you off air about that.
Yeah.
Oh man. Okay, so being that we can't talk about commercials, so does the NIL get down to high school level? Do the kids get paid?
I don't know.
No, that's it's going to change college football completely.
Yeah.
I mean, obviously, you watch the like USC, which being you're focused on high school, but USC is it's the next level up.
Yep.
Just kidding.
A little bit.
Right. So some of their players are making millions and millions of dollars a year with this name, image,
likeness. Yeah. And again, that's something that I don't get involved with.
So what is the area of it that you're coaching?
Linebackers. I coach the linebackers with another coach, Coach Rob. He's been there for some time, so I'm learning from him and our defensive coordinator. So, yeah.
So you guys going to have the next Lawrence Taylor?
We've got some very good players.
Really?
Very good players, yeah.
Yeah. Well, and you guys do turn out a lot of good players. So
yeah, I think we've got the most in the NFL or in college.
Really?
I think.
So you must have a lot of scouts at your games then.
We have college showcases where the college coaches come to our practices. Any given day, you'll just have a college coach there, UCLA, USC. I mean, it's pretty random.
We don't talk about the ruins here.
No. I'm a fan of anyone that wants to help one of my linebackers get a scholarship. So.
Something that's great. It's funny because you look at the better programs. And that's what a lot of the better programs. That's what attracts the players to these better programs.
Right.
Is how much of it, what kind of a relationship does the coach have
for sure
with the next level, whatever that level might be.
Yeah.
Because the smart kids, and some of them are, and some of them are not smart, realize that the vast majority of people are not going to make a living playing football or any other from the high school sports.
Yeah.
Right.
Yeah.
I mean, there's, the percentages are very small. You got millions of kids playing football every weekend in high school.
Right.
And there's only about 1,000 that are in the NFL.
Right.
Right. So the maybe 2,000, but the bottom line is it's a small percentage.
A small percentage of that.
But every one of them can use an education.
Free education and, like you said, NIL, that could change someone's life too if they're smart with their money.
Yeah. And that's a whole, but it goes back to education again, right?
Right.
To understand how to use that money and then go to the next level and maybe become a group health insurance sales
you could
broker.
Sell insurance, help business owners, and give back to nonprofits. I mean, I'm living the dream.
Yeah, something when you think about it, you've got the time to go over and be the dad and watch your son playing baseball and growing through that, which is to me one of the most important jobs there is. Right. And then you're helping other kids, with their future, and guiding. Because when you think about it, how many kids do you have on your football program?
We travel with about 75.
So think about that. Every one of them is watching you. Right. So you're a role model for every one of those people. So a lot of impact on people.
Yeah.
So tell us do you have any one quick story that's a fun story that we could learn about? Because we only got about a minute left. Health insurance story.
Health insurance story? A fun health insurance story? Health insurance is boring until you need it or there's a problem. You know what I mean? So I don't know.
The idea of being able to get a hold of you.
Yeah. Get a hold of us. If you're a part of a nonprofit, if you're a part of a local high school that needs reoccurring revenue, my company would love to chat with you and explain the process of what we're doing and how we're writing checks back. Like I said, on average, it ranges from about $500 a month to $3,000 a month that we're writing checks to local nonprofits.
$500 a month, that's $6,000 right into the organization.
Yeah. And the big ones, like I said, the highest we pay is about $3,000 a month to an organization.
$3,000 a month, $36,000 a year.
Yeah.
That can be beneficial to a group.
To anybody.
Yeah. Right. I mean, a lot of groups are out there hustling all the time for that.
Yep.
If you want to meet Travis, give me a call at 800-306-1990, 800-306-1990. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Getting paid by the hour and older by the minute. My boss just